The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Eastern Time, Tuesday morning. Back in the saddle from a long Memorial Day weekend. Hope everyone had a great 3 days out there. S&Ps, we're pushing all-time highs this morning, in the S&Ps we're up near that level, in the Dow as well. We get the S&Ps up 21 points, we'll call it 20.25 to be exact, just under 0.5% in the positive at 42.23. NASDAQ 100, tech stocks, you're up about 1/3%, 13,737. The Dow up nearly 250 points. Look at that acceleration we had from overnight in the Dow. You were down at 34,400. We've now pushed almost 400 points above that level in the Dow, 34,760. Russell up 20 points at 22.89. Crude, the big story as I talked about, top of the hour update. Crude pushing $69 right now in light sweet crude. We're at 68.75. Highest prices that we've seen since 2018 in that crude market. Gold catching a bid as well. Gold was as high as 19.19 earlier this morning. You're $9 off that level. Oops, where were we? Excuse me. Come on, gold. There you go. $9 off the highs, but still positive by about $5 at 19.10. You put gold on a daily. Quite the acceleration, as I talked about. From March 31st, you're trading at a price of $16.77. You're talking about $233 that we gained through the months of April and March to the upside. Silver higher as well, pushing the highs that we've had in that consolidation since about August. Silver trading at $28.50, and we'll jump over. We pull this up in terms of where we're trading at. The 10-year right now, you're talking about a yield in the 10-year of 1.627%. We got a little bit of rising yields today, the 10-year. There it is on a daily, just kind of flirting with this lower boundary line. Really remarkable. You look at where we've been, what's happened in the market. The 10-year, kind of where we've been towards the end of February, beginning of March. We did reach a low of 130.25. This morning, the 10-year is -7 ticks at 131.22, but you're within 1 point of those all-time lows. And realistically, you're talking about a level pretty much right near the lower boundary line, and these 382s, so Fibonacci, to see what we're looking at here, you back it up. There it is, the 3-year weekly. Okay, you push that full run we had. Talked about this a couple times. This was an area of resistance when it would trade it up to this level back in August of 2019. You've pulled back a 382 retracement in the entire run. Remarkable. You're talking about 23 points. 23 points. You rose from 117.13 in October of 2018. We pushed the highs during COVID, March of last year, and since then, 382, kind of just sputtering at that level, right at that level almost as we look at it, your 15-minute basis. That's 134.24 exactly. We're at 131.22 on the 10-year. And let's jump over to the VIX this morning. We got 20 minutes to go until the start of trading. We got a VIX trading at 1684 this morning. We trailed off last week, coming into the long weekend, actually got a 15 handle towards the end of the day on Friday before a little bit of market sell-off. Nonetheless, all things considered, relatively low volatility market. When you have an S&P that's flirting with all-time highs, the VIX is based off the S&P in particular, but you get the Dow pushing near all-time highs as well. Look at that acceleration. The NASDAQ, not quite to that on daily, right? Come on. There we go. The highs, I mean, I guess so. You know, about 2% from the highs in terms of 14,064. Yeah, 260 points, give or take. We're trading from that level in the NASDAQ 100. And you take a look at where we are in the Russell. Russell, you're talking about 78 points from the highs. A little bit more need to go, but you're pushing the upper boundary line. The Russell, 22.9. Let's pull it up. Where's that level? Yeah, 23.25. Is that what I'm looking at? Yeah, about 23.10, 23.25. We did get above there to 23.66, but all these markets bumping up basically near the boundary lines of the higher price territory. All right, let's jump around to what we have going on. So we'll start off with AMC. Why not? We'll kick it off with a Reddit meme stock. Remarkable what's been happening with these companies. Sometimes it's a self-fulfilling prophecy. It's one way to look at it, right? And it really is. The story goes with Tesla to some degree. Tesla, Elon, brilliant, but self-fulfilling. As in enough people got behind Elon, his dream, his plan to bring Tesla into the 22nd century of electronic vehicles. And they gave Tesla enough buying power, enough market capitalization in their shares. People would sign up and give $1,000 deposit for the cars, which Tesla could basically use for an interest-free loan. You're seeing it play out a little bit with AMC. Now, here's the difference. Tesla was in maybe the most growth industry you can be in right now in terms of the future is renewable energies, electronic vehicles. We're seeing how all the other car companies are adopting it. AMC has this type of capital now to transform their company. How do you do it, though? How do you transform the movie theater business when the way we consume content is changing almost faster than we can all keep up with? So AMC sells shares at $27.12 above Friday's closing price. I mean, kudos to them, folks, right? Imagine you're a company and you're an executive. This is a daily chart. You close Friday at 26.12, okay? And this is not incorporating the overnight session. Now, we were as high as 36.72, which is why this might play into things. Maybe they negotiated this deal on Friday as a result. Nonetheless, either way, they just raised money at a valuation that is above 26.12 when you were starting the year at $1.91, okay? And they raised nearly $250 million. And kudos to the CEO over there, because he's riding the wave in a big way in terms of completely embracing it as he should, because without the retail traders supporting this equity, they're probably much closer out of business for sure than they are right now. But they're up above $30 this morning as they talk about it. So Mudrick Capital Management is buying 8.5 million shares of common stock at $27.12, a dollar premium over what it closed out on Friday. They're raising $230 million. They made big bets on AMC in the past. This is quite a big bet when you're buying in at $27, okay, for this company. You pull up the fundamentals on the Analyze tab. You're talking about a market capitalization of about $15 billion right now coming into that. The latest deal may help the company reduce rent and other operating expenses if it's able to enter into new lease agreements. They've been negotiating with landlords to amend terms of certain leases, avoid potential cash crunch through the height of the pandemic. You have the CEO out there. He's saying that they're going to go on the offensive, quote unquote, was his term. We'll pull up the tweet. He had quite a tweet embracing it in a big way. AMC shares nearly tripled in May, the most since January. There's your percentage returns. January, as I mentioned, it was $1.91, so not hard to get some big percentage returns when you start at under $2. But nonetheless, it's going to be a remarkable story to see where they go. They have to transform the company. They have to be able to take a company that's worth $15 billion in a movie theater business that's technically going out of business. They've already been struggling to keep up with movie theater viewing in a different platform, as in Disney Plus, Netflix, Prime, right? You now have Prime buying MGM Studios. You have HBO Max, Time Warner, releasing all of their movies to streaming at the same time as they're out in theaters this year. There's like 10, 12 films, box office films. Difficult to see how they compete, but they're going to have the capital to do it. Investors have basically said, here's billions of dollars now. You have a capital firm just giving $250 million, and we're going to see how they do. But AMC, it's higher today at $31.67. All right, folks, we got the S&Ps up about 12 points. We get the NASDAQ up 60, Dow up 253, oil this morning up 235, green across the board. I'll be right back, folks.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Excuse me. Welcome back, folks. We got about 12 minutes to go until the start of trading. We had S&P's up about 22 points right now. Let's jump around to some of the stocks that are moving this morning. We'll kick it off. And Cinemark, the movie theater chain, seeing a positive sentiment today. So Quiet Place Part 2, great movie out there. That was out this weekend. More than 58 million in ticket sales, highest weekend total for any movie since the pandemic began. AMC, Cinemark, Regal Cinemas also lifted all mask mandate for fully vaccinated customers. You have Cinemark positive as well. So interesting, that coincides, right, with the story of AMC that we already talked about, selling $230 million worth of shares to Mudrick Capital. You got Cloudera out there. They're going to be private equity. KKR and Clayton Dubier, maybe in Rice, $16 a share. This will be interesting. So Canopy, they're out with their numbers, I believe. Are they out with their numbers? Let's pull this up. Canopy Growth. Is that their numbers? I think it is. Yes, it is. So Canopy's out with their numbers. 38% jump in revenue during the fiscal fourth quarter. Increase was slightly smaller than analysts had been anticipating. And they cut their quarterly loss by 8%, reinstated they expects to become profitable during this fiscal year. Pretty muted reaction on that. Now, Canopy, these cannabis stocks, they've all gotten a little bit of a bump lately. We were on quite a downtrend channel. You make a bump, they get some upgrades last week. Last week, quite a week, you were trading from 22.36 to above 26, and today we're going to open right at that level on their earnings for Canopy Growth. All right, continuing to see what we have happening. Boeing, they're positive in the pre-market. They got an upgrade from Cohen. Boeing's been all over the place. They had an issue with some of their planes last week, right? I think that was Friday morning, dealing with the FAA. They're back higher, pushing exactly where we were for the highs last week, 250, 260. Nokia is going to collect licensing fees from automaker Daimler for its patents, ending a legal dispute between the two companies. Jumping around to some of these. All right, we'll just keep jumping to some of the stories that we have going on here. We're going to tie it into the cannabis market. So, story out there from Bloomberg over the weekend. Interesting, talking about Ben & Jerry's with CBD. You're going to see this happen in a big way, folks. Now, Canopy Growth, I do own some Canopy. We, you should have a little bit of exposure probably to this market if you want in a diversified portfolio, folks, because we're at levels that, you see the acceleration, and there's nothing saying these things can't go back to 1383. But you see some of these numbers they're talking about here in this cannabis market where you talk about whether it's edibles or whatnot, without the marketing of a big name consumer company. So the edibles market grew 20% last year to $1.1 billion. Okay, that's last year. I mean, you're still dealing with, now Florida has medicinal, I believe, not recreational. I know Massachusetts recreational and medicinal, a lot of places like that. Now, when you get into the numbers that they're looking for, here we go. 28.5 billion. The expected size of the global cannabis extract market in 2027. That's not that long away, folks, for almost $29 billion. 17% annual growth, largely driven by the adoption of medical marijuana when you talk about treating chronic diseases, whether it's Alzheimer's and anxiety on two ends of the spectrum. But nonetheless, not surprising to see. And when you look at the companies, Canopy Growth, one of them, right? You get over to the fundamentals. Come on, where are we? Pull up for me. No, not cooperating. The market capitalization, not quite as high as you'd expect for some of the promise in the future. And promises, not quite, right? But in terms of the possible growth that company could have, along with many of them. I mean, even you take a look at Tilray, you're seeing all these pop a little bit. Tilray from 67 down to 13. Aurora Cannabis, quite a run over the last 2 weeks or so. From May 17th, you're trading at 677. You're back at 966 for some of those cannabis stocks. Okay, what else we got going on? Bitcoin. Now, this one's interesting. This is the headline out there this morning. I say this morning, 2 a.m., I think, was the run that they get. Easing volatility sends bullish signal for some. And I said to myself, wait a second. Is Bitcoin easing volatility? Is this how far we've come where Bitcoin, this is a chart that shows easing volatility? Folks, that is like a chart that shows a stock or an asset in the middle of a decline on a parabolic chart. I don't know if easing volatility is something I would just, now, you can see what they're talking about from where we were on May 19th, right? We've been shopping around between 35,000 and 40,000 after falling out of bed. But that headline scares me because the easing volatility, bullish signals, yeah, you've had a pause for 4 or 5 days in this market, but there is no strength here whatsoever. You've just paused a free fall for 4 or 5 days, and all you've done is you paused that free fall the last time that it paused on the ascent in the upward territory on the way up. Doesn't mean that maybe if this is an exact kind of mirror image, right, then realistically what you should see is a little bit of a consolidation for the mirror action on the right before trading to 20,000 and before trading to 10,000. And there's your parabola that it's completed. Left side equals right side. Basil Chapman, he's after me every day, folks. He loves these formations. I learned part of that from watching his program, attending his webinars, and when they happen, they are so symmetrical on either side, and it's pretty symmetrical right now from where we are to 36,000, but it's possible. 10,000. If you can go from 65 to 35 in no time, you can definitely go from 35 to 10 in the same degree, folks. I mean, it's amazing how many articles keep getting written, right? We get Dogecoin. Bloomberg's got an article up there over the weekend talking about a $90 billion joke, etc. We've all talked about it. Dogecoin, just a little frothy when you start saying that Bitcoin might be bullish because volatility has calmed down and you see a chart like that. That's not really a bullish signal. All right, let's jump around to some of the FANG stocks as we get about 5 minutes to go until the opening bell. Amazon, oh, I might get a little sneeze, maybe not. Amazon up about $15, trading at $32.38 this morning. You got Microsoft shares trading higher as well, 250.53. Google shares, Google's just been quite a rocket ship, pushing near all-time highs, 24.22. Facebook shares, same thing, pushing near all-time highs, 330 we'll call it. And we'll jump to some of the streamers. You got Netflix up a bit, 505.50. Let's check out Disney. Disney pushing 180. Now, we have some Disney in my newsletter. Quite a pullback to the 382, right where we had consolidated back in the end of 2020. Disney bouncing nicely. We're going to be pushing above 180 this morning. Probably having to do with a little bit of the, $60 million box office right now. Not bad. When you think about, we're quite not there yet in terms of people being completely comfortable across the scale. $60 million for a holiday weekend box office opening. The movie theater business on its way back, at least. And let's see how another one of my favorites, Uber. Uber, quite a pop as well. Different trend we're looking at, but you put the 3-year weekly, the full run from the lows of COVID at 1371, 64.50. You bounced to 38.2 retracement, and this morning you put that on the daily. We're going to be opening at above 51.60. You're up about 80 cents on Uber, and that's really coming into the bottom of this consolidation, right? You look at the bottom in terms of where we were. You bounced that area in February, you bounced that area in March, you bounced that area on March 25th, and then you accelerated through it. We're going to be bumping back up through that level as a bull in Uber. You want to see it accelerate through that area, but it looks to be as the economy opens back up, they're going to benefit on both accords, folks. People might not be using Uber Eats as often, but that is a habit change in our lives that I think is around for the foreseeable future to some degree. All right, we'll be back in 3 minutes, folks. We get the S&Ps up about 22 points. Be interesting to see how we open this morning. We're going to be pushing right near all-time highs, 42.25. You're only 13 points away from that level in the S&Ps. The Dow up about 260. You're only about 220 points away from that level in the Dow. 35,000 on the dot. The high from May 10th. We're going to open 34,774. Stay tuned, folks. Give us a call. 877-927-6648. Be right back in 3 minutes.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open and we got markets accelerating even higher on the open. We got the S&Ps up 26 points right now. You're trading at 42.28. We get the Dow up 289 right now. We'll jump over to Amazon shares. Amazon up over 0.5%, 32.38. So I'm going to bring up an article here that a friend sent me over the weekend for Amazon, and I own some Amazon. Amazon, folks, is a great stock in the long run, right? They have the cloud infrastructure. They have just the business they run. Of course, they're going to be around for a long time. There's a reason why Jeff Bezos is the richest man in the world. But boy, this one, I joke with friends, he's really going to be running the planet, folks. Amazon devices will soon automatically share your internet with neighbors. I was looking around. Seems like it's the deal. On June 8th, the merchant web host and entertainment behemoth will automatically enroll devices in Amazon Sidewalk. Okay, this is an automatic opt-in. You actually have to opt out of this if you do not want your devices to be used. The new wireless mesh service will share a small slice of your internet bandwidth. Not even sure how they get away with this, the terms of what they are selling you. And I have these items, folks. You know you're giving up some form of privacy when you have an Echo in your house, right? But now it turns out that they just update the software and they say, hey, we're going to use your internet while we're at it, okay? They're going to share a small slice of your internet with nearby neighbors who don't have connectivity and help you to their bandwidth when you don't have a connection, okay? It's kind of like an interchange there. By default, Amazon devices, including Alexa, Echo, Ring, security cams, outdoor lights, motion sensors, and tile trackers. Did you hear all those? It's staggering how many devices will auto-enroll in the system, and since only a tiny fraction of the time, that means millions of people are going to be into this without even knowing what's going on, right? I mean, that's definitely what's going to happen here. It's a shared network. This is from their webpage. This is Amazon's spin on things. It's a shared network, helps devices work better, operated at no charge to customers. The maximum bandwidth of a bridge to the Sidewalk server is 80 kilobytes per second, which is about 1/40th of the bandwidth used to stream a typical high-definition video. When you share your bridge's connection with Sidewalk, total monthly data used by it per an account capped at 500 megabytes, equivalent to streaming about 10 minutes of high-definition video. So not a crazy amount of data that they're using your internet to steal, but they're still doing it. I mean, could you imagine if a company like any company that sells a lot of items, right? Let's just say Barbie dolls. Let's just say Barbie dolls. They sold like 10 million Barbie dolls to everybody in the U.S. And then all of a sudden Barbie said, hey, by the way, when you bought that Barbie doll, we had a chip in that Barbie doll, and you signed a terms of agreement with that Barbie doll. And now what we're going to do is we're going to use that chip in that Barbie doll to create a huge network with our 10 million products that are out there. And that Barbie doll is going to take like, 10 minutes of high streaming data bandwidth from you once a month. I don't know how it happens, folks. It's remarkable. You're going to see it talked about a lot. So you can go in and opt out of this. It's fairly simple. You go into the Alexa app, you go into settings, account settings, Amazon Sidewalk, and turn it off. I plan on doing it with mine. Remarkable. When I saw that out this morning, pretty remarkable in a big way, that what they have going on there. But if they can get away with it, my goodness. And as Amazon gets some eyes on them for antitrust, and folks, this isn't, antitrust isn't going to kill Amazon anytime soon, okay? But that's a tough one for anybody to get to behind when you talk about privacy. And there's a reason why they auto-enroll people in there, because I can't imagine any sane person saying, sign me up for that. I see a huge benefit in that for Amazon, basically being able to use your bandwidth that their items are on. Remarkable, nonetheless. And Amazon, though, we're up about 0.6%. You jump over to the daily on Amazon. You're right in the middle of the consolidation. It's been in between about 3,000 and 3,500. They crushed it out of the park on their earnings last month. Really, I guess it's almost 2 months ago now, April 29th. They pulled back substantially with some of those other tech stocks, but Amazon 32.42 right now. You back it up through a 3-year weekly. It's been quite a consolidation. I don't see Amazon breaking down out of that consolidation to lower prices eventually. Maybe 3,000's the floor in there for a while. But I imagine that company, and again, biased, I get some Amazon. Everybody has some Amazon if you own any index funds. But I imagine consolidation like this, they're poised, but pay attention to that if you get devices in your house. Pretty remarkable. All right, what else we got going on? How about Tesla? So Tesla's vehicle price increases due to supply chain pressures, okay? So price of Tesla vehicles increasing due to supply chain pressures. Elon Musk said Monday in a response to a tweet. Elon, back out there on the Twitter machine. Prices increasing due to major supply chain price pressure industry-wide, raw materials especially, he said. He was responding to a random account which said, I really don't like the direction they're going, raising vehicles, but removing features like lumber. And, you know, Elon's in there saying moving lumber was removed only in front passenger seat. Just kind of back and forth, but they're talking about supply chain pressures. It's across the board, folks. You're going to see higher prices. They're going to be taking out a few things that weren't really necessary. You have Tesla up 1% right now, trading at 631.84. Tesla had been under 600. That's a weekly. We'll put it back on a daily on a couple occasions here. Looks like 600 might be a little bit of support in the near future for Tesla, that or thereabouts. Jump around to some of the other. How about Ford, right? Ford, quite the week it had. This last week, we're up another 0.5%, trading at 1460. Let's see how some of the FANG stocks are trading. Excuse me. Meme stocks, not FANG stocks. There's AMC holding above $30. Now, AMC, what are we talking about now? We're talking about $13.5 billion market cap at that valuation of $13. Remarkable. Let's take out GameStop. GameStop up 2.7%, $227 still on that equity. Let's take a look at the crude market. 68.55. We see quite a consolidation we had from 60 to 65 in crude. We're pushing above those levels, and you back it up on crude. Let's put on a 5-year weekly. And there's what you got to see, folks. You got to go back to 2018. You're talking about October of 2018 to see these prices. We were just above that level at $76.90. Probably means we'll hit $70 at some point in the price of crude right now, at least, if not challenge those highs of $76.90. Remarkable chart when you look about the acceleration we had. $6.50, the low technically on this chart, but negative prices was the execution and the closing price for, I believe it was the April 25th delivery, possibly, for crude. And since then, it's just been a rocket ship. We did have a slight consolidation from about June till November of last year. We were sitting at $40. Well, guess what? $70, the new norm for the price of crude. And gold, as I pulled back a couple times, quite a decisive break for the down channel we had on gold. You really accelerated from about the highs of August all the way down to making the double low that we had. Early March, late March, we make that low in gold of 1677. Yes, there it is, 1677 on March 31st. And it just continues to run, folks, 1909.10 right now in the price of gold. And let's check out the VIX as this market continues to accelerate. Now, interesting, you know, lower highs and lower lows, right? Recently, 1538, we were back in April. We just pushed a level of a 15 handle to end last week. And I believe that's according, let's put this, I think that's in kind of an erroneous tweet. Yeah, an erroneous tick. The VIX was flirting with about 1675. You're showing 1568, but not really real. And as we give back a couple points here, S&P is looking a little dicey. Let's put it on a 1 minute real quick. It's a little bit of a sell-off. 1 minute into the trading month of June. You trade from 42.30 to 42.21, still up about 0.5%. Stay tuned, folks. We'll be right back after this break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Got a chart of the S&Ps up here. A little bit of negative action to kick things off on the first 15-minute bar of June. We're trading from 42.30. We're now down at 42.19 in the S&P. So much for higher prices near all-time highs. Right near all-time highs. We missed it in the S&P by about 8 points. You back it up to the Dow. Dow, that's a daily, putting it on the 15-minute. Yeah, to see the acceleration. There we go. 34,827. So you're within about 175 points of the all-time highs right there. 34,650. That was a fast 200 points in the Dow. Russell up about 18 points, bouncing off the lows, 22.87 in tech stocks. A little bit of strength. Interesting to see how we kick things off. It has been the trend recently. 13,760. We'll put it on the 15-minute, and higher prices in the NASDAQ 100. Meanwhile, you get the S&P pulling back and the Dow really giving back some of those gains so far this morning. Crude up $2.33, holding on to the gains. Bitcoin, 37,350. Bitcoin out of the gate. The moves here pretty substantial just since 9:15. Since I came on the air at 9 o'clock, you had a print of 35,735. We're up $1,600 from there at 37,330 in the price of Bitcoin. And let's jump to notes and bonds right now. Pretty stagnant action right where we were pre-market. You got the 10-year negative about 8 ticks. You're talking about a yield right now pushing, I believe, 1.628. We're almost at 1.63% in the 10-year. Let's take a look at some of those FANG stocks to see the strength. There's Amazon up about 0.7%. Microsoft shares pulling back a bit, up about 2 cents. Apple up about 0.2% as well. Facebook shares giving it back basically flat at 328.85 this morning. All right, excuse me. Jumping around to what else we have got going on. Interesting article from Bloomberg out this morning. If you figure this one out, folks, you figure out a lot in terms of ahead of getting non-farm payrolls for the month of May. We get those numbers on Friday. Expectations I saw somewhere around 660,000 jobs maybe 700,000 jobs they're looking for after quite a miss. If you recall, April numbers, what did we come in at? Like 260,000, 266,000 jobs added in the month of April for non-farm payrolls. There's a lot going on, right? We have stimulus, providing too much stimulus for people who are making very low wages. If they are getting too much stimulus, they're not coming back into the economy. People saying that's anecdotal. There's greater things going on in the economy. Part of what's going on is employees, they've gained a little bit of an upper hand in some situations, and they've kind of come to terms with what they want in life and what they are willing to do in life, and quitting instead of giving up working from home. The drive to get people back into office clashing with workers who embraced remote work as the new normal. I mean, this was not transitory in terms of our lives, folks. We are in basically month 16 almost. If you include February, we're now in June, 14, 15, 16 months, something like that. We've been in this period. People have come to accept the perks that come with that, and they have the ability to provide value. And this is the important part, right? And this is why we see the huge divergence in terms of the poor members of society versus the wealthier members, the educated versus the non-educated. If you have the ability to provide value in a remote workplace environment, then that's something that you're going to be able to do, and you're going to see it happen, and more so. And they're talking about anecdotal in here, but when you get into it, it's still early to say how the post-pandemic work environment will look. Only about 28% of U.S. office workers are back at their buildings. It's a staggering low number when you think about it, right? More than 7 out of 10 workers are still working in some form remotely, as opposed to being back at their buildings, according to a 10 metro area index compiled by a security company. Many employers still being lenient with policies as the virus lingers. That's why I say we got, like, you know, a lot of expectations are on the numbers coming out right now, and they should be, because we're kind of rounding that corner. But the next 3 to 6 months, right, when you see this number get back above 50% or something like that, because it's not going to stay at 28%, folks. 28% is not going to be the number. As offices returns accelerate, some employees may want different options. A survey of 1,000 U.S. adults in May showed 39% would consider quitting if their employers weren't flexible about remote work. Be interested to see how exactly that was laid out. Maybe they would, maybe they wouldn't do it. Maybe they don't have the ability to do it, but they'd consider it. The generational difference is clear among millennials, Gen Z. That number was almost 50%. All right. If you're a younger person, you're probably technologically savvy. You realize that you can do a lot of what you're doing remotely if you have the ability to use a computer, to use your education, to use your words, to be able to interact with technology, to be able to work from home. 50% of people, to see how that plays out. The perks that people are looking at they like, no commute. I mean, it's just cost savings right there with it, right? These two should go together. No commute means no gas when we get oil at $70 a barrel. Myself, before COVID, I was doing a solid 45 minutes to an hour, some days commute. 2 ways, that's 2 hours a day. If you're doing it 5 days a week, that is 10 hours of basically dead time. Now it's not dead time. You should be making use of that time the best you can. I was consuming business news, whatever I was, going into the market, right? There is some value to that, but not to the same degree that you're in a car. All you can do is basically listen to something, but either you listen to a book or something like that, but it's real, and you're going to see it. You're going to see how companies are able to basically fluctuate and adapt the most. The lack of commutes and cost savings. Top benefits for remote work. According to a survey of 2,100 people in April, more than a third of the respondents said they save at least $5,000 a year by working remotely. Now, companies can do the same thing. You're going to see a scale down of the physical presence a company needs to operate, because you don't need office space when you allow people to work from home. And yes, you're going to need office space, okay, but not to the same degree. Maybe you have workers working from home 2 days a week, 3 days a week. Maybe that allows you to have more people sharing the same amount of office space in the office, cutting down on those physical costs. Nonetheless, it'd be interesting to see how it shakes out, and you're going to see these types of shifts. The number that really caught my eye in this article, though, is that still, folks, people talk about everything is back. Still, you got the 28% number there. 28% of U.S. office workers are back in their buildings. Living in Florida, that is not the case. We've been, more laxed than most, and I know that gets political, but nonetheless, sometimes it's tough for people living in Florida to understand how locked down part of the countries still are, because we've been open for so long. Restaurants have been open forever, almost, it feels like, in Florida. Some places just happening. I think Boston just had nightclubs open up. I got friends sending me pictures of Faneuil Hall from their friends, I think it was, on Friday or something. Just staggering crowds, of course, as to be expected. But not even 7 out of 10 people are back in, more than 7 out of 10 people are still at home that were working in an office. That is a huge impact on whether it's those restaurants around those office buildings, right? Just the social structure of what's around those office buildings and how that all function, the workers, the carts, the restaurants, the amount of money you spend when you're traveling, all of that money not being used when you have that many people still not back at their buildings. All right, folks, we got the S&Ps falling off a bit. Look at that acceleration. We're only up by 13 points right now. We just gave up 14 points. Stay tuned, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&P is up 12 points. NASDAQ up 29 points. NASDAQ finally giving it up. They were holding up well for the first 15 minutes of trading, but all the markets giving it up right now. You get the Dow. Look at that acceleration. 34,652. The Russell as well off of the highs. We're up 15 points, though. Still in the Russell. The Russell, the strongest of the indices, up about 0.7%. Bitcoin catching a little bit of a bid, back above 37,000. Crude going to be one of the stories of the day. You got crude up $2.30, highest prices you've seen since 2018. 2018, coming off the Memorial Day long weekend. Crude accelerating higher. You got gold holding on barely to the gains, but giving back most of it. Gold was up to $19.19. We're now barely up $1.50 on the session at $19.0680, and we'll jump to notes and bonds as we continue to get some higher yield. You got the 10-year now off almost 11 ticks at 130. Yep, there it is, 11 at 131.19. You're talking about a yield pushing 1.64%. As yields continue to rise right now this morning. We'll jump over to the VIX as we got a little bit of negative action in the markets. The VIX rising to 1746. Keeping in mind, we get non-farm payrolls on Friday. Big miss last month. Really interesting to see how the market digests. The reason why I brought up that number, where only 28% of employees back at their offices, the world not quite spinning at 100%, not even close, right? Interesting to see how those jobs numbers come up. We got about 8 million people that were still on the payrolls coming into COVID that are not on those payrolls right now. Some of those people leaving the workforce, for sure. If you were on the cusp of leaving and you got used to a remote work environment, maybe you gave up a job last year, maybe you figured out that you could just trail off and be okay with your retirement a little bit earlier. Nonetheless, it might not be 8 million that we make up, but expectations are going to begin to rise, and we get a number on Friday that'll be a big one. And then, of course, you get the Fed 2 weeks from now, and they'll have to talk about that number as well. We'll get some inflation data that'll be on the discussion as well. Thanks so much for tuning in, folks. Stay tuned, and we'll see where the first day of trading brings us, with the S&P is up 10 points, continuing to give back some of the gains right now. And you get the Dow up only 129. Thanks so much for starting your day with me, folks. Stay tuned. Live programming coming back. We'll be back in 3 minutes.